Hello everyone, time for today's daily recap. I'm going to go over the daily plan as well as the live market commentary. Here is my stock twits. I'll leave a link in the description. Alright, creating daily plan step 1, checking the overnight TPO. Where are we trading in the market auction? What does structure look like? These are all things you should know if you want to be a career trader. Having knowledge of these things will help you avoid trading where you should not be and also help you build an edge. Not making sense? I'll cover some here. Alright. Last week's balance, we're building balance. Do we have structure above? Do we have structure below? We have to look at all of these market profile, highs, lows, their distributions, and these are all things that we could take and build context around the market auction so we know what is going on. So step 2, creating daily plan. Step 2, zooming out to our daily time frame. Look at the transacted contracts on the ES. Where can we see buyers? Where can we see sellers? Where are stops going to be placed? We'll go over some in a recap. All right. So similar to how we did yesterday, looking at the footprint. If this is new to you, I have a pinned video that shows you how to read this on the YouTube. All right. So just simply looking at this, forgetting about TPO charts and the current market auction, where do we see buyers and sellers from left to right? Well, we could see an active bid here, right? Where would their stops be? Well, below their entry, no? Maybe below the lows of the day, pop below, and they get stopped, new buying imbalance, and same thing. We're not consistently building a bid. Sellers, on the other hand, we have selling here, their stop gets popped, get the move down. These buyers actually got their stops popped first, then we went up, pop sellers, came down, bid moving up, got an up move. That's simply very simple is how we read it. Now we'll go into smaller time frames, look at the market structure where we have imbalances and stuff like that. Maybe we see on the 4-hour and the 30-minute a bid is moving up, we take advantage trading off of here and our buy zones and whatnot. Alright, today's daily plan, straightforward as always. Very cautious, sell zone. Obviously, all of these came from the tools that I use. I'm going to be going over that pretty soon with the room members. We're going to start doing the introductory course to all the tools, and they'll all be live. We'll talk about that in a bit, though. You can see down here, I said, a long opportunity could present itself here. Going to need to watch the order flow live. Yeah, so that's why I didn't have it marked. We also had one, oops, sorry, dog's running around. We also had one up here that I didn't have marked that could be a sell zone, and I eventually spoke about it on Stock Twits just in case we were to trade there. I didn't have it marked because it would likely be a very cautious sell zone, and due to around where we're opening, I figured it was better to leave it. Alright, pay attention to where all the volume is. This is a 4-hour candle. We'll expand on this in the video recap later. So this is about 10 minutes after the open, and you could see that we're overshooting the buy zone a little bit. Luckily, we have the footprint, and with the footprint, we're not blindly buying levels. We could see that there is no real bid here. You could say, well, there is a buying imbalance here. We have almost 3,000 contracts bought just over 900. And yes, you're right, there is a buying imbalance, but we're not buying every buying imbalance and selling every selling imbalance. Look at all the contracts done here, 10, 20, 30,000 contracts being done when we have a 3,000 contract bid over here. This isn't much. So context, the footprint helps us get much more context, than we could on a bear candlestick chart. Should be no surprise that buyers are trying down here. Now we watch the order flow for signs that we want. Alright. So what are we seeing on the daily? We're seeing temporary exhaustion. Why do we see exhaustion, or how? Well, 10,000, 6,000, 7,000 contracts being done, fading to 1,000. Much smaller numbers here, especially compared to these, of course. This is even better signs of exhaustion towards the top, with these thinning out numbers compared to all of this volume. So what is this? Temporary exhaustion is what we're seeing. And look how big these volume nodes are compared to this, have this little bit of a volume gap. So this is, you can take this for a trade. This isn't the trade that you want. I've spoken about so many times. What you want to see when we're going for a long is a nice B-shaped distribution where we see a big bid down here. But these are valid, but you have to play them differently than you would a normal trade. That's exactly how I did, and I'll get into this in a little bit. Alright, so 20 points or $1,000 a contract delivered from the buy zone. Clean tape here on the 5 minute. Took 75% off. I'll go over that here actually. Alright, so looking at the 5 minute, what do we see? We see we originally blew past or overshot it a little bit, the buy zone. So hands off right now. Not seeing the bid we want, and right before this candle close, we get an influx of orders. Market makers, algos, institutions, whatever you'd like to say. We close the candle up here. Beautiful signs of exhaustion here at the lows, buying imbalance. So eyes are peeled. At this point, I have my limit sitting right here at 36.30, not entered, but I have it filled out waiting. And what am I waiting for? I'm waiting for this candle to open. We're building more volume in this area. We pop down and look at the tape once we come down compared to up here. It thins out. Exhaustion at the lows, buying imbalance is still there, and I'm entering as we pull up when we see this buying imbalance, and I end up being filled at 28.50. So as I said, I took 50% off at 5 points, which was about over here, and then all of it off at 10 points. Why? Because we didn't have that B-shaped distribution on the larger time frame. So what we could see here a lot of the time is we'll run these stops as we did here. All these people, their stops got ran down here. We get a nice pop, and then we'll come back down and either keep on building or just make a new low. So you got to be more conservative with these types of entries when you don't have the volume you need on your side. Now, as of recording this, this ended up being the low of day. This popped up, came down, gave another entry before going about 60 points up. But I unfortunately missed that entry, so it is what it is. Another 15 points now delivered from buy zone given before open. Personally missed this one, as I said. So yeah, this was the re-entry, or if I was still in the trade, this is a perfect re-add. We come up here, sellers trying to move down on the tape, and look, thin tape, thicker, and nice exhaustion right into here, double buying imbalance. Perfect trade entry. Get your 10 points, 5 points, whatever your target price is, and this actually was a perfect entry to continue up for that 60 points. And of course, at this point, the distribution did look better. 33 points now, so yeah, we just continued up. This was pretty important. I said, see where buyers and sellers are on this 4 hour. Lots of volume. We break, should expect violent move. We'll cover some in recap. So after the initial 30 minutes, the 4 hour candle closes, and now we have this 10 a.m. candle. And we see sellers are active up here, buyers are active down here. Now what's going to happen is we're going to bounce between buyers and sellers, and they're going to have to keep on adding to their positions. And using our tools, using smaller time frames, the delta, we can monitor who's adding more and who's overwhelming each other. And obviously that will help us continue our bias. So if we're in the trade, we're going to be wanting to see a bid moving up. So it could give us confidence to stay in a trade. So time-stamped, 10:08. Look where I have highlighted bulls we want to add. Now go to a 5-minute chart and look at the 10:15 candle, right where I said, right? Provided a 20-point bounce to where I said sellers need to hold. No crystal ball, no hindsight. This is order flow. We see the auction where market participants are and use it to build our edge. So someone asked, could we get a trending day short squeeze? And of course, here I say we could, yes, but one thing at a time. Previous 4 hour close above a majority of the volume. Oh, I do have this picture. Nice. All right. So This 4-hour closed all the way up here above a majority of the volume, which is highlighted right there. So if we're looking for that squeeze, or at least a continuation up, you're going to want to see buyers hold this high volume area. And why would this be held? You're going to have a lot of people who are short selling in here, that when that candle closes, they are in the red. Their position is negative. So when we pull back into it, they'll be so happy to get out at their break even or closer to their break even, and they provide a floor. As you can see, they're trying already. If they cannot, we'll go back to the buy zone, where buyers will have to add big time. Why? Because we'll have so much volume trapped up here that for them to overwhelm this all the selling pressure above, they'll have to add a lot. So that was at 10:08, and did I post the candlestick chart? Let's go. All right, 10:15 was right over here, and that's exactly where bulls wanted to hold, and we got a let me go back to here. At first we got a 20-point bounce, and where was that 20-point bounce to? This is looking at the 4-hour. We pulled back into that low that I was talking about, or this the low of this high volume area rather. We see the exhaustion of the buying balance, exhaustion on the tape, I'm sorry, double buying and balance, and we get a 20-point rip to right here. And sellers did try to put a lid here, and we did start to fall, and buyers overwhelmed them, and we of course continued up. But seeing the order flow, we could see in range-bound areas how we were for this time being, where buyers are likely to come in and where sellers are. And with the context of the buy zone, the TPO and stuff, we have this bias to go up. So if you missed an entry down here, you could look for something here. Of course, it's riskier, and when trading for longevity, as a career, we want to minimize our risk. That's why we have these buy zones. But once you're really good on the tape, there are opportunities here. All right, yeah, that was pretty much it. We have a very busy week coming up with the room members. Of course, we open tomorrow, the 1st. We'll create, 2 videos are going to come out tomorrow, where I share the footprint and TPO settings that I use on Sierra, as well as a video helping everyone navigate Sierra a bit better. And then Monday, Wednesday, Friday, we have live at the close our introductory course of all the tools and the market logic I use. Tuesday and Thursday is also going to be live after market close, where we will do market recaps, similar to how I do here, but in much less vague. No vagueness. We're talking about all the tools and exactly why we have buy zones, sell zones, why some are cautious, very cautious, and why we prioritize some over others. So a lot of info to get through. If you're interested, link is in the description. See you guys tomorrow.